If you own stocks right now, you really need to hear this. Because over the next few weeks, the market is going to change in ways most people are not ready for. And if you're not paying attention, you won't slowly lose money. You'll lose it fast. Let me be very clear from the start. This is not fear-mongering, this is preparation, and the people who prepare early are always the ones who come out ahead. Before we go any further, if you care about protecting your portfolio and finding real opportunities before the crowd, make sure you subscribe to StockOra right now. We break down what actually matters in the market, without hype, without noise. And trust me, you don't want to miss what's coming next. Now imagine this. Think of the stock market like a game of musical chairs. There are 100 companies dancing around, and as long as the music is playing, everything feels fine. Prices go up, headlines are bullish, everyone feels smart. But here's the part most people forget. In musical chairs, every round, seats are removed. Now imagine this time, not 1 or 2 seats were removed, but 50. The music didn't stop yet. Everyone is still dancing. But suddenly, there are only 50 chairs left for 100 companies. That is exactly where we are right now. And the scary part? Most investors haven't even looked down yet. They don't realize the chairs are already gone. They're still dancing, still buying, still hoping. But the moment the music slows down, reality hits. And when it hits hard. What you're seeing in the market right now is panic, confusion, and aggressive selling, especially across AI and tech stocks. But this isn't random. This didn't come out of nowhere. A few days ago, something happened that quietly changed everything. Anthropic, the company behind the Claude AI model, dropped a massive announcement. They released multiple open-source plugins for a product called Claude Cowork. And this isn't just another chatbot. This is different. This is an AI agent that actually does the work. Not helps, not assists. It completes tasks from start to finish. One of those plugins shook the market instantly. The legal automation plugin. It can review contracts, analyze NDAs, handle compliance checks, and complete workflows that used to require entire teams of people. Think about that for a second. Work that used to take dozens of paralegals, thousands of billable hours, entire departments, is now handled by one AI system. And this is where fear entered the market. Because if AI can replace legal workflows today, what's stopping it from doing the same thing to finance tomorrow? HR, sales, procurement, accounting, customer support. Wall Street suddenly realized something very uncomfortable. AI is no longer just making people faster. It's making some roles unnecessary. That realization triggered what you're seeing now. A massive sell first, ask questions later rotation, especially out of software companies that depend on human users to generate revenue. And this is where we need to talk about something most investors don't understand yet. Almost every enterprise software company on earth makes money the same way. Per seat, per user, per month. If a company has 500 employees using a tool, the software company charges for 500 licenses. Simple, predictable, recurring. But now imagine an AI agent can do the work of 5 employees. Suddenly that company doesn't need 500 seats anymore. Maybe they need 200, maybe 100. The work still gets done, probably faster, probably cheaper. But the software company just lost 60 to 80% of its revenue from that client. This is called seat compression, and it's the silent killer hiding inside AI adoption. Wall Street never priced this in. Valuations assumed stable or growing user counts. But if AI reduces the number of humans needed, revenue expectations collapse. And when growth expectations fall, valuation multiples fall with them. That's why stocks trading at extreme multiples are getting destroyed. And yes, it looks scary, but here's the part most people miss. This destruction is not bad for everyone. This is a cleansing. For the last 2 years, anything labeled AI got rewarded. Great companies and terrible companies were all pushed higher together. Now the market is separating fantasy from reality. The weak ones are losing their chairs. The strong ones are being dragged down unfairly. And that is opportunity. If you're holding random, overhyped AI stocks with no real moat, no real customers, no real value, you should be nervous. Some of those companies will never recover. But if you're holding real businesses with real technology, real data, and real customers, this panic might be the best gift the market gives you all year. This is where smart money gets made, not by panicking, but by knowing exactly what you own. And in the next part, I'm going to show you exactly how to separate the winners from the losers, how to position before the next rotation, and how to use this volatility instead of letting it destroy you. Before we continue, drop a comment and tell me, are you holding tech stocks right now, or are you sitting in cash? And if this is helping you see the market more clearly, share this video with someone who needs to hear it. Here's the truth most people don't want to hear. This sell-off isn't over, and it won't be a one-time event. Every time a major AI company releases a new tool that targets a specific industry, we're going to see the same pattern: panic, selling, confusion, and then opportunity. The key is knowing what side of that you're on. The first thing you need to do is separate AI native companies from AI dependent companies. AI native companies are building the infrastructure, the models, the compute, the platforms. They sell the picks and shovels. They benefit no matter which industry gets disrupted. AI dependent companies are the ones whose core business can be compressed or replicated by AI. That doesn't mean they're all dead, but it does mean they must adapt fast. Talking about AI on earnings calls is not enough anymore. The survivors will prove it in their pricing, their products, and their margins. Which brings us to the second filter. Look closely at the pricing model. Any company that relies heavily on per-seat licensing is exposed. If AI can replace multiple employees, revenue shrinks. That's just math. But companies shifting toward usage-based or value-based pricing are showing awareness. They're adapting. They're building models that grow with outcomes, not headcount. Those are the companies that survive the fire and grow stronger once the smoke clears. The third thing most investors completely miss is proprietary data. Even if software layers get disrupted, data doesn't lose value. In fact, it becomes more valuable. AI systems need high-quality data to function. Companies sitting on unique financial data, legal data, healthcare records, industrial data sets, those assets don't disappear. The market might panic about their software, but their data moats could become even more powerful as AI adoption accelerates. This is where patience pays. The fourth strategy is using volatility instead of fearing it. Sharp sell-offs create mispricing. Mispricing creates opportunity. The investors who lose money are the ones who panic at the bottom. The investors who win are the ones who already know what they want to buy when prices fall. That means doing your homework now, not when headlines are screaming. And finally, remember the real game. The game has always been buying quality over time. Some stocks deserve to go to zero, others don't. The tragedy is not bad companies dying. The tragedy is good companies being sold by scared investors who won't be around for the recovery. If you truly understand what you're holding, you don't panic because of noise. You think in years, not days. This market environment feels uncomfortable because it is uncomfortable. But uncomfortable markets are where wealth is built. Chairs are being removed. The music hasn't stopped yet. But smart money is already counting seats. If you're still dancing blindly, now is the time to look down. If you found value in this breakdown, hit like so more people can see it, share it with someone who's confused about the market right now, and subscribe to StockOra if you want clear, honest market analysis without the hype. Tell me in the comments what stocks you're watching and how you're positioning for the rest of the year. I read every single one. Stay sharp, stay disciplined, and I'll see you in the next video. But if you're holding real businesses with real technology, real data, and real customers. This panic might be the best gift the market gives you all year. This is where smart money gets made, not by panicking, but by knowing exactly what you own. And in the next part, I'm going to show you exactly how to separate the winners from the losers, how to position before the next rotation, and how to use this volatility instead of letting it destroy you. Before we continue, drop a comment and tell me, are you holding tech stocks right now, or are you sitting in cash? And if this is helping you see the market more clearly, share this video with someone who needs to hear it.